I started that site in 2008 when I put my
Good evening. This episode of the Intraday Price Action Recap is being brought to you by the Smart Money Manuscript. Hello, my name is Timothy Lee Rogers Sr., and I'm the creator of the Smart Money Manuscript. But Tim, what is the Smart Money Manuscript? The Smart Money Manuscript is your roadmap to financial freedom. Inside this powerful course designed to transform your financial future, I've meticulously condensed over 1,000 of my public YouTube videos into 40 highly efficient lessons that span just 2.5 hours. This course is strategically designed into 4 phases to help guide your learning in the most logical and effective way possible. Phase 1 lays the groundwork, covering essential financial literacy like budgeting, banking, and taxes. In Phase 2, you'll move beyond the basics, learning about brokerage accounts, figuring out how much you need for your own individual retirement. You learn about how to do fundamental research on companies, and you'll also learn how to conduct technical analysis by looking at stock charts. Phase 3 empowers you to build a robust portfolio and leverage your capital using advanced techniques like options and futures, and it also teaches you the importance of backtesting your strategies. Finally, Phase 4 takes a deep dive into the advanced ICT concepts, giving you a professional edge. Each lesson includes a short quiz to help solidify your understanding. By the end of this journey, you'll have the confidence and tool that you need to make intelligent investing decisions, manage your money without fear or ambiguity. So if you want to be a long-term buy and hold investor, if you want to be a swing trader, if you want to be a day trader, if you want to trade stocks, if you want to trade options, if you want to trade futures, the Smart Money Manuscript is for you for $69.99. Yeah, $69.99 for all of this here. What's going on, everybody? How you doing? Whatever. I know who tried to say something, but he was like, well, I don't know what that was. I don't know what that was. Cheap cell phone family. Hey, good evening, everybody. If this your first time tuning into Tim's Tidbits, please allow me to say welcome. If it's not your first time tuning into Tim's Tidbits, I still want to say welcome. But I want to give you a nice hearty, well, thank you for always tuning into Tim Tidbits. If you don't know who I am, my name is Timothy Lee Rogers Sr., a.k.a. Arania Grande. That's just Big Spot if you don't hablo Espanol. And you're in tune to another episode of the Intraday Price Action Recap. Now, before we get into it, man, before we get into it, I just want to say that if you are um in the Discord and you have been privy to the pop-ups that I've been doing, I must say, I must say, I'm not trying to toot my own horn. I'm not a horn tooter. No, I'm not. But they've been good. They've been good. I'm not a horn tooter. I don't toot my own horn. But when I tell you that hey, my focus ain't right. There you go. When I tell you that today, like many other occasions that have happened in the past, when we get together, when we meet, right? When we meet and we talk about these candles, these little red and green Japanese candlesticks. I don't know if Phil is in the gang. I've suspected Jim. My brother brought him up to my attention. He said, Jim, you got to watch Jim. He kind of gives me ICT vibes. I suspected Jim of being Michael in disguise, right? But I now suspect Jim of being Phil. I think Jim is Phil because when we talk about things in the market, it just seems to happen immediately. And if you don't know what immediately means, if you get a dictionary and open it up and look in there somewhere, you got to find a vowel that makes the I sound immediately, right? And you will know that it means rat den. Rat den. RATDEN. Rat den. It happens right then. And today was one of them occasions, right? We were in the Discord doing the how you call it, pre-market analysis. I was trying to think. I kind of slipped into a little bit of Denzel John Q right there. Yeah. But we was talking about something very very specific. It might have even been Pacific, but I know it was very specific, right? And shortly, not long, shortly after we got off the pop-up, right? It happened. And I was like, wait a minute. Wait a minute. I got to do another pop-up. I got to do another pop-up. Right? And I just want to say, I made a post today. If you're in the Discord, I shared a post today to encourage you. Yes, I told I told Gemini, y'all know I can't say that chat GT. I can't say that one. I went to Gemini and I said, Gemini, this is what I want to say to my Discord group. This is how I feel. Gemini, express this for me. These are the words that I want to come out of my mouth. And it gave me, and I took some of the words they put in there. It was like, it wasn't the way I talk, but I took some of the words out and I put in the words that I actually say. But that's what it's my sentiment. Right now, who we got in here? We got Marco up in here. What's going on, Marco? We got Deborah up in here. We got Mike Pence Fly. Mike Pence Fly, if you will be so kind to relate to Empire Tradings that, hey man, actually gang. Back in the day, they called me Pop-Ups McGee. Before my, you know what I'm saying? But before my schedule was like super like like weighted down with like a whole bunch of obligations, I was Pop-Ups McGee. Because Empire Traders, I think he made a comment like, "Hey, Tim's been very generous with all these pop-ups," and I was Pop-Ups McGee. That's why the name of the channel is I Stay Popped Up. It ain't just called Voice Channel. It ain't called Come Hang Out. It's
Yeah,
called
because you wrote that letter, and I was expecting like once a week, but it's every day, which is so grateful for, you know?
yeah.
So
I'm Pop-Ups McGee.
yeah.
You know, when I don't, I'm a retired 53-year-old retired guy. I'm very non-committal, right? And when I have to obligate my time away from my family, that's something very valuable, right? But if I ain't got nothing going on, I'm Pop-Ups McGee. I don't have anything going on. I'm looking at charts. Y'all looking at the charts. When I pull up and talk about it, right? We got Lump up in here. What's going on, Lump? We got
What's
Hidden Learning
going on?
chilling.
Games to be sold, not told.
What Dutch pot at? Talk about games to be sold, not told. What Dutch pot at, man?
Other side of the sofa. I'm on my phone, so we're on the sofas. She
Dutch
got one
pot.
side. I'm holding down the other side.
Dutch pot said, man, I'm tired of this unauthorized labor that you getting out of me, man. Dutch pot said, I am underage.
The
Dutch pot
Dutch is every bit of 42 right now.
that Duchess says she is not 42. uh, we got here to learn and share and here holding down the number one top fan slot. Initially, it said she was number two. Rhonda Green up in here. It said Rhonda Green was number three. Then it said Kim was number three. It said Kim was number one. And then it said Kim was number three. Valentine said they can't stand them ads. I can't stand them ads either, Valentine. I cannot stand them ads either. They be getting on my last nerve, right? They be getting on my last nerve. Okay, I see the view count has gone down. That means I have weeded out the wheat from the tear. I have weeded out the wheat from the tear because the view count has dwindled. Let's go ahead and get to it. If Price did something today that caught you off guard, right? There's a link that's in the description of the YouTube. It's all right. So you have to keep commenting to stay ranked. Really? I don't know. That ranking thing suck. On my YouTube is right here. On your YouTube, it might be below, it might be above. I don't know where it is on YouTube, but there's a link that's pinned in the comment section, and it's for Zoom. You can come over to Zoom. You'll go into a waiting room because we don't want any crank yankers coming on the stream anymore, right? And I will let you in. And once I let you in, you're free to unmute and say, "Hey Tim, can you walk me through what went on in Price today?" Right? Can you walk me through what went on in Price today? Because I was expecting this and Price did that. And I'll say, sure. Let's go through no crank yankers. I'll say, sure. Let's walk through Price and see what it is that we missed. All right. And Sometimes I wish that the pop-up sessions are recorded so I can go back and just revisit the magic. But then I'd be like, you know what? I'm glad they're not recorded, because if I go back and revisit it, it may not be as majestic as I thought it was. And I just want to live in my fantasy. Okay. I want to live in my fantasy. And that's all right with me. Now, if you'll pay attention to this side of the screen right here, right? You should see my charts show up. Right? You should see my chart show up, and you should see the NASDAQ E-mini futures on an hourly chart. I should be up here in the corner over there, out of your way. Right? I should be right up there in the corner, up there somewhere. Right? I should be out of your way, and you should see the entire screen. Right? So today was Friday, 10 October, in the year of our Lord 2025. Right? OMG. What happened here to learn this year? What happened? Yes, the view count went down again. Oh, yes. There, it went down again. We got rid of another, my nose peeling, y'all. I'm sorry. I got very dry skin on my face. It's peeling. Uncle Sam pays me for that. She said, just looking at how far it went. Oh, just looking at how far it went. Oh, talk about the drop. Drop. All right. I took 2 shorts today. One short that I was in, right, was I got into it. What was it? Who was on the pop-up with me today? What was it, like maybe, what time did the drop happen? The drop happened on this 10 o'clock candle. Right? I might have been in that short 3 minutes before that drop happened. Uh-oh. I'm on the wrong screen. I'm on the wrong screen. Drop. Base drop. All right, this was the drop. All right, I entered long here. I said, you know what? I'm wrong. And I entered short here. So 10:52 is when I entered long on 10 at 10:50. All right. Something in the charts that we discussed inside the pop-up. At 10:52, I said I'm wrong. And I flipped. Right? I didn't allow myself to get stopped out. Right? Breaking news. Apple nears deal to acquire talent and technology from computer vision startup Prompt AI. I didn't take the stop out. I flipped, right? And then at 10:57, so I was in there, I was in the short for 5 minutes. I was in the short for 5 minutes because at 10:57, carnage ensued. All right. And I was stopped out. I mean, I was taken out. It hit my TP before I could even grab it and try to move it to where I really wanted it to be, because I was monitoring price and I was like, okay, I'm gonna see what it does at this level and at this level. Right. We talked about those levels in the thing. And then I said, once I see how it acts at those levels, then I'm gonna adjust my TP And I was listening to a live stream and I was looking down at my phone. And then I heard the people on the live stream say, whoa, where did that come from? And I looked up and I was out of the trade. I said, wait a minute, I'm out the trade. So I looked at my P&L. You know what I'm saying? It said I was up X amount of dollars. I said, man, I'm out of the trade. Like, and I looked at the time and I was like, I said, okay, that's it. We ain't got no news at 10:57. And then I heard the people say, President Trump threatening tariffs on China. I said, okay, that's what it is, huh? Yeah, sure. Right. And so, right. So then later this afternoon, right? And y'all saw the screenshots that I shared with you. Right. Y'all saw the screenshots that I shared with you later this afternoon. Right. Since I was already, we talked about it this morning. I was anticipating them raking people over the coals. Right. I was anticipating them raking people over the coals. We discussed why I thought like that. We, no need to just get into the weeds of it all. Right. So I said, hey, right, if price gives me opportunity to get some of this short, I'm going to take it. Right. I've already got a little piece earlier. I was lucky enough to be right there when they opened the floodgates. Wasn't expecting it to go like that, but I was there. I was waiting for them to pull the rug. Right. And so once we came down here, right. So if you look here, right, we stopped there. Right. Continued down. And we stayed there. Right. Went down. Right. Pulled back up to there. Right. Went down. So nothing down here. Right. Nothing. Right. That's the initial drop right there. This is like the initial drop. That first 3 minutes that changed everybody's lives this morning. That 3 minutes right there sent people to the reset line or sent them to the payout line. All right. That initial drop that came down from up there. After that right there. Right. Looking at this 1 minute chart. Right. Looking at this 1 minute chart right there. Right. There is nothing. Right. There is nothing in this 1 minute chart right now that says the bottom is in. Oh, I'm sorry. That says the bottom is in and we're going back to the top. Nothing at all. Nothing at all that says that. But so many times we find ourselves, right? Raise your hand or say me. I'm going to squanch up the chart, right? Raise your hand or say me and say, and if this is you, right? You're watching the chart, right? And price moves 675 points, 676 points, 0.50. But price moves 675 points. And you say, it has to go back up from here. It didn't went too far. Is that you? If that's you, raise your hand. Where you at? Put a 1 in the chat. Say it's me in the chat. Unmute and say it's me. If you and it dropped 675 points. You didn't get an opportunity to participate in that drop. And you say it's got to bounce now. It didn't went too far. Is that you? Have you ever said that? Why is my hand up? Why is it my hand up? Lower hand. Get out of there, hand. Uh-oh, y'all. Me, but I wait for reversal signs. She said me. Uh-oh, y'all. Valentine. Hold on. Hold on. Valentine. 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 Valentine said, nope, I'm not assuming nothing. Y'all know what I call on Valentine. Y'all know what I call on Valentine. Valentine. I call Cap Valentine. I call Cap Valentine. Valentine said, hey, I don't assume nothing. Yes, Jay. Jay said we erased all the progress in the past 4 weeks. Let's go to the weekly chart. All right. All right. This is what we did this week right here. This big red candle right there. All right. So this last week, 1, that week 2, that week 3, right? And we came halfway through that candle right there. Right? But guess what? Guess what? If we go back through the live streams, right? If we go back through the live streams and we look at what we talked about every single day, ever since, let me see, this week right here is September 15th. And when we look at our calendar, right, September 15th through September 19th. So ever since September 22nd, right, because the 15th through the 19th is the close of this candle right here, right? So ever since the 22nd of September, which would be the start of this candle right here, ever since then, what did we say about where the price is right now? Right here, where price is right now, that point there. What we said? We said that the weekly chart had what? Somebody talk to me.
Has a weekly busy.
Yeah, we ain't say a weekly busy. We said the weekly chart has what? A what?
Uh-oh.
We said you're right about the busy. The busy is right, but we said the weekly chart has what? Has a
It's a high probability Pediarate.
Mm-mm.
Has a reason to come down there?
Has a reason. A reason to come here. We said the weekly chart has a reason to come here, and we all know that it will. We said it got a reason to come here, right? You don't believe me?
Everyone said you didn't know anything about Philip Bailey.
Right? We come over here. Y'all probably can't see that, but it says bullish fair value gap week 9/15/2025. And when I turn that on, right? Oh, that's the wrong one. 898, right? I need to look at this calendar here. 9898. Turn it on. Boop! Reasons. The reasons that we here. We ever since September 22nd, right? Ever since September 22nd, we've talked about this right here, because this week right here, when this candle closed, right, it was September it was September the 19th. So when this candle closed on the 19th, it created this BISI right here for the week of September the 8th. Right? So since it created that BISI and we were extended up here, we said the weekly, if we start to move bearishly, the weekly has a reason to come here. Right? And we were not trying to fight the bullish trend, right? We were going to watch the sell program on the intraday time frame to see if it wanted to continue to offer sell side delivery until we got to that weekly chart. We've been talking about that since the 22nd of September. Why? Because when this week starts on the 22nd, this is our discount PDA rate, where we're anticipating price to maybe trade into it and give us some support, right? But the algorithm did not want to do that. It wanted to keep squeezing everyone who was trying to pick the top without waiting for any type of clarification. These caps are hurting my head, so now I have to take it off. Here, if you think I'm capping, feel free to take mine. Even though we just got our butt spanked by the hurricanes, it's still go nose. Even though we just got our butt, we went out there and played like a bunch of trash until the last 5 minutes of the fourth quarter. Last 5 minutes of the fourth quarter, we put up like 19 points in 5 minutes. It was 28-3. 5 minutes left in the fourth quarter, and the game ended 28-22, I think. Yeah, it was like 28-22. But we put up 19 points in 5 minutes. But they was molly-whopping us the whole game. And I was pissed. My son kept texting me. I'm in the movie trying to watch one bout at a time, and he keep texting me over and over and over. I said, stop texting me. I see it on my phone. We losing bad. We fumbled again. We threw an interception. We getting molly-whopped. But if you think I'm capping, let me go full screen. Feel free to take my caps and put them on your head if you think I'm capping about the things that we saying. I don't have to come on Al Gore's internet and waste your time, people. I don't have to do that. I'm just here trying to provide a service to the folk. Okay? Now, as y'all see, this stuff really works. Right? Wait a minute. Do my little eyes deceive me? Look at where we stopped at. Oh my goodness. We stopped right there at consequent encroachment. That's good enough for government work on a weekly chart. We start right there at consequent encroachment. What in the bedujiba? Wait a minute. That can't be real. This stuff really works. All right. So looking at what we erased, that's what we was looking at. We erased. Look at all the days that we took out. Oh my goodness. Oh my goodness. Look at all of the days that we, oh my goodness, look at the days that we took out. Oh my goodness, look at the days that we took out. All right. And then you know what they said? You know what they said happened? All right. They said that Trump puts extra 100% tariffs on Chinese. Wait a minute. Trump puts extra 100% tariffs on China imports, adds export control on critical software. All right. So this is what they're blaming. And it's starting in November. This is what they're blaming that drop is. Right. This is what they blaming that drop on. Right. That's what they blaming that drop on. But we all know Phil. Some of us call him Jim. Some of us call him Jim Big Bird. But we all know Phil. Right. And we know that Phil, right? Phil let the algorithm out the cage. Phil let the algorithm go. Phil let the algorithm do what it's programmed to do. Right. Right. And when you look at, right, when you look at the chart, right, when you look at, and when you sit here and look at this daily chart, right, right, do you see this low right here where we took out that liquidity right there? Right. Can y'all see that? If you can see this low right here, right, well, we took out that liquidity, right? Put a 1 in the chat for me. If you can see that low right there, if you see that low, if you see that candlestick right there, if you can see that low right there, right? Can you see that low right there where we took out this liquidity right there? If you can see that, put a 1 in the chat for me. If you can see that low, don't y'all be typing all slow either, man. Y'all typing all slow. You know what I'm saying? Y'all try when the commercial come on, y'all trying to back it up to see if I said something while the commercial was on. So now you ain't in real time. And so now I got to wait for you to be typing. You know what I'm saying? I got to wait for you to be typing. You know. Y'all know what? Y'all tell y'all something. Let me tell y'all something. Look at man. Y'all know, I know what y'all be wanting me to do. Y'all be wanting me to get mad and get off YouTube. Cause when I get mad and get off YouTube, the Zoom be jumping. Jokers be unmuting, talking. I just swinging for the fence, calling out wrong answers and everything. Y'all, you better, y'all know how I do it. Y'all know how I do it. But one person put a 1 in the chat. Can't nobody see that. Y'all blind. Do I need to make it bigger? Here, let me make it bigger. That better there. That better there. I need that in the chart. I need all that in the screen. All right. Now, let's try this again. Do y'all see that low right there? That low right there. Do y'all see that low? Giggity, giggity. Giggity, giggity. I see that low right there.
Yes.
I got a yes. I got a yes. Right. Now, that low right there, it came down and swept out this low right here. Right. Let's put a line there. Boop, so you can see. Make it big so you can really see it. All right. See how we traded below that? All right, see how we traded below that? Now, if you ask, get out of here, Zoom calendar. If you ask the average trader, be it a Wall Street executive, retail Rick, anybody besides an ICT trader, what will they say stopped price from going down after it swept below that low right there and then rejected back up there? What will they say stop price?
Heavy buying pressure.
Heavy buying pressure is what stopped price from going down. People will lead you to believe that buyers and sellers move this market, right? But I'm here to say n'est pas, right? The market is coded to move efficiently for smart money, right? Speaking of smart money, come on, smart money manuscript. If you have not taken advantage of the smart money manuscript, there is a link in the description below. Let me do this right here. Let me run a quick advertisement. Let me run a quick advertisement while I get my slides together. All right. The smart money manuscript. All right. This is the smart money manuscript here. All right. It's a course, put together a course, right? Got these right here. Got 4 phases in the course, $69.99. 4 phases in the course. Each video has a quiz that goes along with it. And then you have monthly Q&A meetings with me at 12 p.m. I changed the time to 12 p.m. every second Saturday of the month, $69.99. Pull up on the Smart Money Manuscript. It's well worth it if you haven't. Now, brought to you by the Smart Money Manuscript. Let me find my things here. All right. Let's see here. Open. Browse. Where do I want to go? Smart Money Manuscript. Let's go to let's see. Which one is it going to be in? Trading. Time is King. No. PD Array Matrix. No. Which one is it going to be in? I'll do this right here. I'll open them all and I'll look to see. All right. It's power 3. All right. Don't look like it's in there. Market maker models. I'm looking for a very specific graphic that I can see quickly. It might not have the same graphic. It might not have the same graphic inside here. This time is King. It might not have the same graphic. It's not. It don't have the same graphic. It's in Time is King. I was looking for it, but it's in Time and King. The graphic is different in the Smart Money Manuscript from like the older slides, right? Here it is right here. The core idea is to understand that markets are not chaotic. Hey, look here. Look here. Don't be leaving and trying to come back, interrupting me when I'm trying to talk, right? Again, right? Time and price. Let's just read the whole thing, right? Straight out the Smart Money Manuscript. Time and price within the framework of the ICT trading methodology, time and price are not considered random or disconnected variables. Instead, they are fundamental, interconnected components that drive market movements. The core idea is to understand that markets are not chaotic, but are engineered by smart money. That's IPTA. Don't think smart money is these big banks. They're just as dumb as you. Smart money, aka IPTA, who leave behind footprints, aka PD arrays, in price action. Right? So it's not buying pressure, it's not selling pressure. Right? IPTA is not chaotic. Right? IPTA is very, very specific about the things that it does, and it leaves behind footprints, right? AKA PD arrays in price action, right? It was right there under my nose the whole time, and time is king. All right. We're going to leave time is king over there in case I want to come back and read something else in there. All right. Okay. Straight out of Smart Money Manuscript right there. $69.99. Pull up, it's worth your money. All right. So since buying and selling pressure didn't make price reverse right here, Tim, what did it? I don't even see a PD array resting right there that would have made that happen. Well, let me show you. All right. Remember what we say about when the elephant steps in the pool. What happens when the elephant steps in the pool? Somebody tell me what happens when the elephant steps in the pool.
We get displacement.
Oh my God.
What?
Sure, and get your wife.
Oh my God.
Sure, and get your wife. Displacement. And Valentine following you right off the cliff.
I definitely was about to say that too.
Valentine following you right off the cliff. Type it louder here to learn it, Shell. Type it louder. If the elephant steps in the pool, the water moves.
Okay, I won't forget it.
So we wait for the elephant to step in the pool, right? And we don't chase. We don't chase when the elephant steps in the pool. Why? Because we want the elephant to tip what it really wants to do. Okay? We're going to get to this. So the elephant steps in the pool. Whoosh! Rush to, how you know he stepped in the pool? Look at this move. Whoosh! Stepped in the pool. Right? Then what happened? Stepped in the pool. Whoosh! What happened right here? What do we call that right there? What is that right there? What was formed right here? It's a 3-candle pattern. Got a higher low to the left and a higher low to the right. What is that right there?
Swing low.
A swing low, right? Elephant stepped in the pool, whoosh. Elephant stepped in the pool, whoosh. Formed the swing low, right? Then we come over here. Elephant stepped in the pool, whoosh. Elephant stepped in the pool, whoosh. What did it form right here? 3-counter pattern, right? Higher high to the left and the right. What is that?
Swing low.
I mean higher low. Swing low.
Yeah.
Right? So then when you look at this swing low, and you be like, man, that swing low right there is lower than that swing low right there. Then you say, wait a minute. I mean, that swing low right there is lower than that swing low right there. But then you notice and you look over there and say, hey, man, it's lower than that swing low over there too. And then you say, oh, my Lanta. Right? When I got a swing low with a higher swing low to the right and a higher swing low to the, higher swing low to the left and a higher swing low to the right. Oh my goodness. That swing low is an important swing low, and he's smiling because he knows he's important. So when price drops here below this low, it's not going to mess with that low right there. So it's going to reject and go back up. Oh my goodness. It even works on the daily time frame. You got to be kidding me. So because that's an important swing low, the price stopped after sweeping this liquidity and turned around because it's not going to mess with that important PD array. The algorithm left itself a clue where not to go back beyond. And it said, you know what? When I started dropping right here, I needed some rocket fuel. Right? And the only way I can get rocket fuel is if I take out some liquidity. Right? So, but I have to engineer the liquidity. Right? So while I'm engineering liquidity, I'm going to leave myself a place where I know not to bother. So when I come down here and I pop back up there and I make this swing low right here, see, 1, 2, 3 candles, right? I make that swing low there. I know that I just created a very important low right there. I know that I just made an intermediate term low. So when I come back here and I make that daily low right there, I just made relative equal lows. And retail traders are seeing this as heavy support. You know why they're seeing it as heavy support? Because if I come here, where's my line? If I come here and I look back across there, I see that over here it was resistance, support, support. Oh, this is heavy support because I can draw a magical line here and I see all this body touch. Look at all these touches. I got 1, 2, 3, 4, 5, 6, a bunch of touches. Oh, this is heavy support right here. So as soon as I see that, I'm going to pile my stops right up under here. And now the algorithm just comes down and says, thank you for your stops. Bye-bye. But it knows that that's an important low. It cares not about buying and selling pressure, right? So once it took out that low there and it took off, right? Now, guess what? Where, right? Now we have this low, right? We expand up. Matter of fact, let's just stop at every pullback. We go here, boop, right? Once we go here, right? So price was going up after it rejected here. It was going up here, right? Once it was going up, right? It kind of came back during this day right here. But during this day, well, we went up and down. Who cares? Went up or down first, right? Traded above there, right? Took out some liquidity there, right? Then we traded up some more. So then guess what we did? Right? We're extending up, right? We stopped there, right? And before we stop there, let's pay attention here. Let's pay attention to what's going on here. So as we come up here, going up, right? See these down close candles right here, right? This down close candle, where are we closing? We're closing above mean threshold of the down close candle. This down close candle here, where are we closing? We're closing above mean threshold of that down close candle, right? We create another down close candle after we take out this high. Come in here. Where are we closing? Above mean threshold of that down close candle, right? We're still extending up. We stop. We make another down close candle as we extend our range, right? Then after that, what do? We go up, 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 up. Stop right here. Boop. All right. So now, when we pay attention here, I'm going to leave my smiley face there. I like him. He's my friend. Hello, friend. I'm going to take the support line away because that doesn't exist. That's not real. Okay. So, as we go up, all right, again, we point out, close above mean threshold, right? We have us a nice little pullback there, right? Let's stop and examine this, that pullback right there. All right. We're going to examine that pullback right there. When we were going here, boop, 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 boop. Right, stop right there. Let's talk about this spot right here. Right. That spot right there. Right. So now, when we trade it, right, above that spot right there, right, when we traded above this spot right here, right, we created a balanced price range. Right, we created a balanced price range right there. Now that we created a balanced price range, right, we're not anticipating price to come all the way back down here into a discount, right? Why? Because when we leave this area, the algorithm is saying, I'm done with this right now until I go and do something very important, right? What is that very important thing? I don't know. You got to ask this guy right here. He's friends with IPTA, okay? So, well, Tim, if we're not waiting on price to come all the way down here, what are we doing? Right? We're looking at when we left this area right here, right? So when we're coming up above here, right? We come there, right? And then we get here, we pull back down, then we leave this area, right? This right here is our bullish order block right there, right? Its job is to block price. So now we're watching price from there to there, right? When we leave this area right here, right? See these here? This is the bulk of the trading right here. Let's highlight the bulk of the trading. Bulk of the trading, highlighting you, doo-dah, doo-dah. See, looking at, I'm just going body to body. Highest body, lowest body, right? Highest body, lowest body, right? When we're leaving that area, now, this is the area you're looking for price to come back to a discount in. Why is that? Because our entire dealing range, right? All of this around here is efficiently delivered. So we're just focused on the latest expansion of the dealing range because this part of the dealing range is efficiently delivered. And then we left it and not making it a balanced price range, right? So on this pullback right here, right? And this is also the day where we made the high of this weekly bullish fair value gap on this pullback right here. That day there, right, is when we made the high of that weekly bullish fair value gap. Now, mind you, the high, it wasn't created until this candle right here closed. When this candle closed, then this existed. But this is the day we came down and made the high of that. If you notice right here, right, that's the high of that weekly fair value gap right there. But what did we do? We came down into a discount of the latest expansion of this portion of the dealing range, the latest expansion of the overall dealing range. All right. So when we came back to a discount, right, zoom in here, right, You see what we have here? We have a daily BISI right here, right? That we traded down into. Do we have that marked out? Or did I erase that already? 912. Let's go back and see if I still got him in there. 912. Daily fair value gap. I have 918. What day is that? 912. I got 918, 915, 98 for the week. No, I don't have the daily. I got that one up there still. I took 912 off. Right? 912 was lower. I the ones higher because it was getting farther and farther away. So I took 912 off. Okay. Getting farther and farther away. All right. So now we've done that. Once we make these down close candles here, right? What did price do here? Closed above, right? Mean threshold of the down close candles, right? Continued up, continued up, continued up, right? Then we came back down here, consecutive down close candles. Now, remember what we said, but don't forget here, we're not just ignoring the overall dealing range, because as we continue up, guess what? The overall dealing range is continuing up, right? Notice now, this is our overall dealing range there, right? Where is the weekly fair value gap that we just created in relation to the overall dealing range? Still in a premium, right? Still in a premium, okay? Ain't nothing about that right now. Don't worry about it, right? We get us a pullback here. Let's analyze this pullback here. Now, when we went from this portion of the dealing range, right? This is efficiently delivered, balanced price range because we left it. We expand here, and then we come back down into a discount of this dealing range, right? So now, right, we're not watching from this order block up to there, right? No. We're not watching that because we came back down to a discount of this portion right here, right? So now we've offered fair value to the part that needed to be offered. Now we're watching from here to there, right? For trading opportunities inside the latest expansion of the dealing range. We pull back into a discount, right? And then notice when we pull back into a discount, right? And mind you now, we're walking through price. Go full screen for this. Yes, we're walking back through price. And I'm showing you what makes the market move. Remember, we was saying why the algorithm stopped where it stopped. I'm still showing that now. It's not buying and selling pressure. I'm showing it now. I mean, when I said, why did it stop there? I showed you why it stopped there, right? Now, keep walking with me. And we talked about all of this in real time as it happened, right? Was every trade a winning trade? No, it wasn't. You know what I'm saying? If you stuck to your risk management and you stuck to the concepts, if you stuck to your strategies, I'm pretty sure you ended green for the week, for the month, for the day. If you didn't, live to trade another day. But we talked about this stuff in real time. I'm just putting that out there for the haters. There are people that hate the fact that I trade ICT concepts, and I don't know why. I don't know why. Okay. All right. So when we came back down to the discount, right? What else did we do? Right. Now we did say we did have 918 still in there, right? We had 918 and we had 915 in there, right? We had those in there. I remember seeing that. 918 was in there. 915 was in there. Right. Also, y'all remember us talked about these wicks. We talked about these wicks also. Right. We talked about those wicks. But as we came back down to a discount, right? We came down to the discount PD rate inside of the latest expansion of the dealing range, right? And what did we close, right? Well above this consequent encroachment, and we closed above consequent encroachment here, right? Once we set these consecutive down close candles, right? Once we set these consecutive down close candle, right? We come up, we got a nice closure above mean threshold, right? We come up, we got a nice closure above mean threshold of this candle here, right? We have an inside day, right? Inside day. Next day, we sweep liquidity, come back to consequent encroachment of this right here. We come up, nice closure above mean threshold of that down close candle, right? We are respecting bullish order flow, right? And as we're going up here, right? As we're going up, yep, you guessed it, we're expanding the overall dealing range as we go up. Every time we make a higher high, right? We're expanding up, expanding up, expanding up, expanding up, right? Boop, go up there. Now, when we look, right? When we look here now, right? We're going to turn all this right here is daily. This is daily stuff right here. Right, that's our daily stuff, right? We've come in, we've used it as support, all that right there. I'm gonna turn it off for now. PD rays never go stale, but we're just gonna turn it off for now. All right, a commercial popped up. All right, turn it off. Turn it off. All right, there you go there. And then on this pullback right here, right? Remember that pullback there? That's when we made the high of that weekly Bessie right there. Right. So this pullback was the high of this Bessie. This pullback was the high of this Bessie. Okay. Now that we've come all the way up here, right? So now the same thing that we were doing when we had our pullback, what did we come? We came back down into the discount, offered sell side delivery, back down into a discount somewhere of fair value that the algorithm found fair, and it took off again. So we're no longer, right? We're watching the latest expansion leg, right? From here, right? To here, right? And then you can say, okay, we poked above there and we had a nice little pullback there. So yeah, let's go there. Let's just go here, right? Because we did have a pullback on this green candle, right? After we went up here and took out this high, we did have a pullback. So now we're watching from here to here. All right. Now, when we're looking at price now, okay, when you look at the daily time frame here, all right, looking at the daily time frame, okay, what do we say? Looking at price here, right? All of this right here is very efficiently delivered on the daily time frame. There are no imbalances in this area here for price to come back down to. All right. I think we might have a tiny one here. Let's check. Yes, there's a very tiny, there's a very tiny fair value gap there on the daily time frame, right? Right, very tiny daily fair value gap on the daily time frame right there. Okay, so we'll mark him out. Right. We'll mark him out. There is a very tiny daily fair value gap there. Okay, now looking at price when we initially moved away up to this point right here, right? Up to that point right there, when we left the balanced price range. Okay. Okay. Walk with me now. I'm cooking. I'm cooking. Right there. When we left out of the balanced price range, right? Have we come to a discount of the entire price or dealing range? Have we come into a discount? Right. Somebody let me know. Have we come into a discount?
No.
No, we haven't. Right? No, we haven't. Right? We haven't come into a discount. All right. We already said when we had this move right here, we came into a discount for that portion right there. Right. So this portion here, boom, we've come into a discount. Right. Now, as we expand up, right, on this pullback, right, this pullback already happened. On this pullback here, when we created these consecutive down close candles, have we come into a discount for the entire dealing range?
No.
No, we didn't. All right. Very good. All right. And we said on this move here, we came to a discount. On this move here, we came to a discount. All right. Now, go all the way to the top here. Now, this is where price currently is when we get up here. Right. Now, when you look at price, right, and we're up here, right, how does price move? Okay. Consolidation, expansion, retracement, deliver, consolidation, expansion, reversal, retracement, deliver. And the only two ways if they're going to deliver price, right? So if we are, this is our overall dealing range, right? This is where we're at the top right here. At this point right here, we're at the top of our overall dealing range, right? No matter all the little minor moves inside here, right? From where we made our happy man at, we have consolidation and we have expansion. Don't worry about the expansion, retracement, expansion, retracement, expansion, retracement, expansion. For the overall range, right? We got consolidation and we got expansion, right? No matter what delivery method you think is going to happen, right? No matter what method you think is going to happen, right? What comes after the E? A R, right? Consolidation, expansion. It's either going to be a retracement or a reversal, right or wrong, right? Y'all follow me? Y'all tracking? If you hear me, say you hear me. Y'all follow me? It's either going to be a retracement or a reversal, right?
Yep.
All right. So we see that this was efficiently delivered. Left it, balanced price range, right? Let's do this right here. Right? I'm going to do this right here. Okay. Matter of fact, I'm just going to go body to body so we can see the areas, right? I'm just going body to body on these right here. All right. And then that's when we left. Uh-oh. Blue. Azul, azul. Azul, azul. Right? Azul, azul. Y'all know what that means? Y'all know what that means? Who know what that means? Azul, azul. Very good. Azul, azul. Azul, azul. All right. So we leave that area, balanced price range, right? So then when we come up here, right? Come down here. Now, notice this here. Notice, walk with me now. Walk with me now. Walk with me now. Oh, he cooking today. Right? This candle here. Oh, I'm in the wrong spot. This candle here offers buy side and sell side delivery, right? Buy side and sell side delivery. Buy side delivery. Got a little sell side in there, but that wick there, buy side, sell side delivery. Buy side delivery, buy side delivery, buy side delivery, right? Buy side, sell side delivery, right? Come down off sell side. Where does this candle go? This candle comes all the way down to that candle there, right? Why did it stop right there? Why did it stop right there? Let's pay attention, right? We got buy side and sell side delivery, right? What does that mean? price has offered buy side delivery, it offered sell side delivery, right? So within that wick itself, right, it's very efficiently delivered. Buy side delivery, sell side delivery. And then we come here on this candle here, right? And we trade up, we start to leave that area, right? So, whoop. So now we have left that area there, right? So if we've left that area of efficient delivery, right, that means that that little area right inside there, right? I said I was going body to body. That means that little area right there, that must be a balanced price range, right? And then if we noticing, you know what I'm saying? This here, we offer buy side delivery there, then we offer sell side delivery, and then we leave that area. That must mean that's a balanced price range too, right? Right. And then if we offer buy side delivery going up, and then we come back down and offer sell side delivery, right, to here, and then we got a wick that comes down and does the damage, right? And then we leave that area, then that must mean that this is a balanced price range too, because we left that area, right? And then when we came up here, when we said, okay, here, right? And then as we expanded up here, right, we offered buy side delivery, right? Then we came back down in, right, and offered sell side delivery, had a very small imbalance in there. And then we left that area, right? And then we going back and forth. We see what we're saying. We're going back and forth here, right? So all of this is very efficiently delivered, right? All of this is very efficiently delivered. And then we left that area, right? So then that must mean, right? If I'm following what you're saying, right? That must mean that all of this here, let's just get it. I'll do him like that and do him like that, right? That must mean that all of that is a balanced price range also. Okay. So now when we open up this day right here, right? We open up this day right here and we see that we trade up and take out the high, right? We trade back down into the bullish order block and we trade up and we stop right there, right? So if you above a balanced price range, what do we anticipate that balanced price range to act as, right?
Support.
If you're, we anticipated to act as support. So we went up, we took out buy side, right? And then we dropped down, hit the bullish order block. But that bullish order block, when we hit it, right? We came down, the balanced price range is acting as support. But when we hit it and we start to go back up, right? We came back up here, right? So imagine here, you're coming down, you're going back up. The algorithm don't care that we tell price to stop at 5 o'clock, right? So we hit it down, we go back up, and as we're going back up, we stop and we don't take out that high. So that bullish order block is failing at its job to push us beyond this high, right? So if you're supposed to push us higher and I'm above a balanced price range, it should act as support. But if IPTA is ready to go lower, right? What are some signs that it's going to show as it's expanding up? What is it going to fail to create when it's showing that it's ready? It might be time to turn around.
No imbalance.
It's not going to create any imbalances. We did not create one imbalance in this area right here. Right. So then when we went up and we failed to take out that high, if you are above a balanced price range and you are bearish, what should IPTA do to that balanced price range?
Cut through it like butter.
Cut through it like butter. Slice. What did it do today? Cut through it like butter. I think I'm done. I don't want to cook no more tonight.
You're not done.
I ain't cooking no more tonight. I'm done.
Wait a minute.
Sick of it. They don't believe it's real.
I want to own a pop-up today. Did you talk about that if price closes on the daily below Wednesday 9/17, that wick?
You said Wednesday 9/17.
Uh-huh.
Hold on.
The previous day, well, prior day low.
Hold on.
Wednesday 9/17.
Wednesday
9/17.
9. Oh, even 9/17. Over here somewhere.
Yeah, that wick.
Oh, right here. Okay, here. All right. What about it? The one I just deleted. I just deleted that line. Oh, no, I didn't. This line, that right at 9/17. Okay.
Okay.
What about it?
Let's see. That if price closes here on the daily, it would give us a bearish breaking market structure on the daily. Do you talk about that today in your pop-up?
No, I didn't, but we spoke about that before because we said that we get a daily breaking market structure if we trade below that low there, right? Because this is when the elephant stepped in the pool, this low took out that high, and if we trade back below that low, that's a bearish breaking market structure right there, right? So we got a bearish breaking market structure on the daily right here. Now, which question?
So
Mm-hmm.
we still got to wait to see if we're going to be bearish. Let the market tip its hand some more, maybe, or
If you're looking for the crystal ball, be
Well,
careful.
crystal ball
no,
coming.
don't look for it. Oh my god! Oh my god! Oh my god! Well, look, I asked my question wrong. That's what I did.
Okay, so all right, let's go here, right? This right here, that gives us a bearish breaking market structure. Okay. All right, that get where's my I ain't got my breaking market structure here no more. Is it on the regular line? Let me see if it's on the regular line. Yes, it's on the regular line. All right. That gave us a bearish breaking market structure right there. All right. Okay. Elephant step.
But what about that other wick?
This right here?
The other one. Yeah, that one.
I'm saying this wick here?
Yeah.
That I was about to say something.
What?
All right. Okay, so we looking for, right, when the elephant step in the pool.
Right.
That's what we're looking for. So we're not looking at this low right here as the breaking market structure because the elephant stepped in the pool here. That was the down, and then here that was the up. Right. This is just that's internal liquidity inside this move right here. Right. Just like over here. Right. When we came down here and back up, we took that low out. So now this is the move here. That's just internal liquidity inside this move there, right? So that's just, now we've taken, and now this, and this is all internal liquidity for this move right here. You see what I'm saying? We're just coming down. We've taken out different levels of internal liquidity inside this move here, right? So we've come down, taken out that. We've come down and taken out that. Now this one here is internal liquidity that we've taken in a discount, right, of the move. But this right here gave us our break in market structure, because this is the low that took out the high. You see what I'm saying? If you want to be theoretical, that low took out the high. But when we just looking at market structure, that's your break in market structure there, because the elephant stepped in the pool here and stepped in the pool there, and then we trade back down. Boom, that's your break in market structure. That's your bearish breaker. Okay. So now, now the weekly had a reason. Now, we got our bearish break in market structure, right? On this time frame, you want to go higher to see if this bearish break in market structure is in line with bullish order flow on the higher time frame, meaning the weekly or monthly has a reason to retrace back down here. All right, so we'll go up to a weekly time frame, right? And on the weekly time frame, we see that we have a weekly fair value gap right here, right? So the weekly had a reason to come down here, and it does not invalidate, Jesus Christ, right? And it does not invalidate the bullish order flow on the weekly, because our weekly break in market structure is down here, right? That's where we get a weekly break in market structure. So on the weekly, right, no matter if you anticipate in a reversal or a continuation, we consolidate, consolidation, expansion. There's an R coming up, a aura, as they say in the city, right? We got consolidation, expansion. So now we're getting a retracement or a reverse, right? Retracement, reversal, retracement, reversal, right? What's the difference? The
Hey Tim,
retrace.
one
Yeah.
quick question. You about to explain it. Go ahead. Go ahead.
No, go ahead.
I was going to say the difference between the retracement and the reversal. The retracement usually goes down to 25% of the four quadrants, or a little bit below equilibrium.
It's coming back to a discount and then continuing up. The
So
retracement is,
anywhere past 50%.
yes,
Okay.
anywhere in a discount, right? It can be
Yeah.
51% or
90.
99%,
Okay. I got you.
right? Right. But once we get a full on trading through the other end of
That's
the
the
dinner range,
reversal.
that's the reversal, right?
Okay.
And then you got to remember, right? Whatever time frame you're watching, even though you get a reversal,
Mm-hmm.
you're getting a break in market structure, but you got to go up to see if the higher time frame got a reason to come down there that doesn't invalidate the bullishness on that time frame.
I got you.
So as we look, we see that the monthly, right, has a reason to come down here that would be okay for the weekly to have a bearish break in market. I mean, we said this was the weekly bearish break in market structure right there. So the monthly has a reason to come down there that will be in line with a weekly bearish break in market structure. There's a BISI there. Now, right, you want to pay attention, right? Looking at our balanced price range on the monthly, right? If we come from here to there, right, come all the way to our high, right? That BISI is in the discount, right? So if we come down, get a weekly break in market structure on the monthly time frame, that BISI is in a discount, right? We also have a BISI down here, right? We got a BISI down there too. And if we come all the way to the bottom of the initial move, right, now half of this BISI is in the discount, right? So you always got to remember, like, we're expecting this to remain a breakaway gap. Why? Because We created, then we created another one. So now that's a breakaway gap, right? So now we're anticipating this to remain a breakaway gap, right? Because it's inside this balanced price range, and this is our discount PD array, right? Right there. So right now, you're anticipating that to remain a breakaway gap, right? That commercial just got my attention, right? You're anticipating that to remain a breakaway gap. So now, looking at price, right? We now see that the monthly has a reason to come to here, right? A monthly retracement, right? Consolidation, expansion, retracement, deliver. A monthly retracement, we have a reason to come here if the monthly time frame is ready to retrace, right? The weekly, right? The weekly, as we saw, the weekly had a reason to come to here, right? And we're there now, right? The weekly had a reason to come to here, right? Now, other than this fair value gap right here, right? Ain't nothing else left down here but wicks and liquidity. All right. So if this fair value gap, right, if we look here, if we get below here on a weekly basis and create an inversion fair value gap, which Bissy is that in the sense of when we came up here and took out this liquidity? Which one is that right there? Deborah, you got me talking about it.
I'm looking.
Appreciate
Okay, let's see. Oh, we're
in the sense of running up, taking out this liquidity. Which imbalance is that right there?
Oh, is that the first one?
That's the first imbalance that we created on the way up here.
Okay.
Right. So if we come down here, right, because you're saying we got this bearish breaking market structure, what does this mean? Right. So if we come down here on a weekly basis and we create an inversion fair value gap there, right? Now we have there's nothing else down here on the weekly but liquidity. So now we can anticipate that to act as an inversion fair value gap to take us to the weekly liquidity. Why? Because the algorithm needs liquidity to continue to run. So if we come down here and get a weekly inversion fair value gap, right, we can anticipate it to act as resistance to bring us to the liquidity, right? Does that make sense in the term of the monthly? Yes, the monthly has a reason to come down here. That's our discount PD array on the monthly. So that would make sense for that to happen. All right. So now we're going back to our daily time frame. Right. So on our daily time frame, we come down, we got a bearish break in market structure. We traded down into the discount of this portion of the expansion up, right? So now we've come down, we've soaked up this liquidity right here, right? And now on the daily time frame, right, we don't have any imbalances down here, okay? And then, so the only thing we got to watch now, we close with the possibility of creating a SIBI this big, right? We've cut through this balanced price range and we've closed with the possibility of creating a SIBI that big. Okay. So what do we look for? We look for signatures that want to continue down in the efforts of trying to create a weekly inversion for fair value gap. It don't matter if Monday, Tuesday, Wednesday, Thursday all close below this right here. If Friday closes back up here, this is still not an inversion fair value gap because it's a weekly PD array, right? But if we get a Friday closure below this, no matter if we went Monday, Tuesday, Wednesday, Thursday, Friday, right? No matter if we traded up and came back down, if we get a Friday closure below this right here, this is now a weekly inversion fair value gap. All right. And the thing you would want to see is price making some type of short-term high so that it can come up and sweep liquidity as it makes its way down. You want to see it creating short-term highs. Why? Because the algorithm needs liquidity to move. So it make a short-term high, sweep it, come down, make a short-term high, sweep it, come down. Now we've taken the weekly liquidity
but we've moved to a discount on the monthly time frame. And then we got our monthly PD array that should act as support, because we still have these relative equal lows that we haven't taken. So we can come down and gather up all this liquidity, come into that, and then start to rally back off of that. Right. So that's the way you can just sit there and plan out your attack. Now, hopefully that makes sense to you. Before I move on, anything else? Anything else?
No, but yeah, that's what I was asking about. Yeah.
All right. Because if you don't, if you want me to, I can ask.
No, not necessary.
Okay. All right. Now,
Tim, ask it for me, please. I just want to see what it says.
All right. Now, this is something that I talked about in the pop-up today, and I talked about it in a pop-up before. I don't know. I talk about it very often, right? So now, okay, we know that money resides here, right? Because we said that, right? That was important low, right? We know that money resides there, right? So now we know price came from here, right? Price came from here. Came here, we engineered some liquidity there, relative equal lows, right? And we moved all the way up here, right? And now price is starting to look heavy on the daily time frame. We got a daily break-in market structure. It's starting to look a little heavy on the daily, all right? There's not much lower than this on the weekly, right? So if the weekly continues to be heavy, right? Now we have a place that we can shoot for, right? Where is that? Here. That can be our draw on liquidity, right? Why? Because the algorithm is seeking liquidity, right? So if you anticipate that to be your draw, this is how we talked about back testing today, right? And when we back test, right, it took me a long time to realize this. When we're back testing and we're looking at stuff that's already happened, right? When you're looking at, let's get out of here. All right. When you're looking at this dealing range right here, right? Let's just say let's do it like this. All right. Put it on a weekly time frame. When you're looking at, right? When you're looking at, just say you're looking at this range right here, right? When I initially started back testing, right, I didn't understand that I'm not studying this move right here, right? Because I got it marked out from this low to that high. I'm not studying that move right there. Think about it like this. Y'all know I speak extemporaneously, but this ain't exactly how I said it on the pop-up. But now, those that was on the pop-up, we got something that's going to be recorded. When Michael teaches market maker models, right? What side of the model controls the name of the model? Hello?
It's either the right or left.
Oh my God, Sharon, if you don't get your wife off this live, the right side of the model, thank you. The right side of the model controls the name, right? Think about it. In a market maker sell model, a market maker sell model looks like this, right? Where's the right side of this curve? Over here, right? It's a market maker sell model. A market maker buy model looks like this. Where's the right side of the curve? Over here, the market maker buy model. So if I'm going back and I'm studying price, right? If I'm looking at from this low to this high, I'm actually studying this side of the curve. Why is that? Why is that? Because this was the draw on liquidity. I'm studying how did price go to the draw on liquidity, right? And then once I understand how price goes to the draw on liquidity going down, right? When I'm looking at this, when I'm looking at this leg right here, right? And I understand how price moves to a draw on liquidity going up, right? Now I understand how to read the price going up and going down, right? And then I realize all this time when I've been putting my ranges in the 4th grade, right? I thought I was putting it in the 4th grade because of what already happened. Nepa! The quadrants are not there for what already happened. Put a 1 in the chat if y'all ever heard Michael say, I can tell you exactly where my PD arrays are going to form. Put a 1 in the chat if you ever heard Michael say, I can tell you where my PD arrays are going to form. Have you ever heard that?
Yes.
Yes. Do you know how he knows that? This is just little Timmy Rogers' concept of it, right? By going through back testing, right? And realizing, wait a minute. Michael teaches you to trade market maker models on the right side of the curve. The market maker models are named based off the right side of the curve. So when I'm going back and I'm studying these price runs, I'm not studying the left side of the curve. I'm studying the right side of the curve, right? So if I'm studying the right side of the curve, these quadrants aren't there for the left side of the curve. These quadrants.
Right? Hold on, Tim. Man, you got the charge for this right here. You got the charge for this. You can't get this away for free. Now that you're going to go too deep with it right now. Don't stop playing. Go ahead.
That's it. It's over.
For
Listen, man.
$69.99, buy my
Listen, man.
manuscript.
Discord.
Buy
Discord
$69.99.
exclusive.
It's over. That's it. It's over.
Zoom. Bring
That's
them
it.
Zoom. Zoom and finish. Bring them
That's
to
it.
Zoom and let's
I'm
finish.
done.
Come on now, you got to bring it home.
I brought it home on the pop-up today. I finished it all on. I took it home on the pop-up today.
Lord have mercy.
I was there on the pop-up.
Fix it, Jesus.
All right, I'm giving this and then I'm gone.
Okay.
The quadrants ain't for the left side of the curve. The quadrants are for the right side of the curve when you know the draw on liquidity. So that's right. Price went up, right? Imagine in hindsight now, after we got a bunch of price over here, we're anchoring it from this low to this high, right? And then, so let me do this right here. I'm gonna copy this. Right. And I already talked about this in lessons. I taught, oh, you're not a diamond member. I'll go the last diamond member lesson. I talked about the same thing. All right. So let me hide this. But before I hide it, I'll hide it, and then uh-oh. 55. Oh, got it wrong one. Come on, man. I'm on the wrong one. That's why. All right. That should be the right one. Yes, it is. All right. So now this one here. Okay. So when we go back and we study in price, right? Right. So we're just gonna come back and say we knew that this was gonna be the low, right? Because we studied. That's how we do in hindsight. We're studying, right? We knew this was the draw on liquidity right there, right? And then we go there. Or we can even just come to the low. We'll just go to the low, right? We'll go to the low because that's the expansion, right? So now we go through and we study price, right? I'm gonna cut this off, right? When we go through and we study price, right? Looking in hindsight, right? We look at our range, right? And what do? We put our range in the fourth grade, right? We got a bullish dealing range. We go from the low, we go to the high. We put it in the fourth grade, right? And then we be like, okay, it's something about these quadrants, they important, yada, yada, yada. But what you're studying is, right? Now we go in here. Let's go down to, this is a weekly chart, right? Let's go down. Let's just go down to a 15-minute chart. We're going to go all the way to intraday time frame to a 15-minute chart, right? I can't, I can't get enough in the picture. Let's go to a 60-minute chart. I can't get enough in the picture. Let's go to a 4-hour chart. Now I got enough in the picture. Okay. When I go to a 4-hour chart, right? What do you notice about this market maker model here, right? What do you notice about this market maker model? If we look at these quadrants, right, there are opportunities, right, at the quadrants coming down, right? If you're selling, what do you sell? You're selling a premium, right? If you're buying a discount, right? So this right here. So you want to sell at as close to or above this area right here. So if you notice there, right, you got beautiful selling opportunities here, right? And then sometimes you even get a chance down here at the lower quadrant, but this is where you want to do all these selling, right? And with that being said, once you figure that out, right, that's when you understand these quadrants are not for the left side, they're for the right side, right? They're for the right side. And so when you come to a point, right, in the algorithm, right, tips its hand and shows you what it wants to do, right? Now, once you get your confirmation, right, you don't want to be the first guy at the party, but once you get your confirmation, right, you find, right, where price came from, how did it leave, right? You get your confirmation. And now you say, okay, now we've left, we've done something significant. And where is it going to? Right? That's my draw on liquidity. Right? And then you put that into dealing ranges. And these are the areas where you anticipate setups to form, right? You're anticipating opportunities at these quadrants right there, right? No matter how far you want to take it down, you're looking for the best opportunities at these quadrants going into that fearful unknown around the side of that hard right edge of the chart over there. See how you can't see where the front of that arrow is? You like, man, what's around there? You're using these, you know what I'm saying, to figure out where your opportunities are going to lie on the way to the draw on liquidity, because you're completing a market maker sell model, right? Right. So when we come back over here, right? If we come over here, right? This is where price came from here. Price came down to here. And then now we're saying price is going to go back to here, right? But we're extending it to this side instead of putting it on that side of the curve. Extend it to this side over here, right? This is where price is going. And if we look over here, right? Buying opportunity, buying opportunity, buying opportunity. I'm done. I'm done. Get off my live.
That was fantastic, Tim. Thank you.
Get off my live.
They say it's easier to see it when the camera's already printed in hindsight, man.
Hey,
What about
man,
the people? What about the people that say that?
no speak English. You know, you pay me today, tomorrow. No speaking English. My mic had got low. My mic had got low, y'all. My bad. Oh, sorry. Oh, sorry. If my mic got low, I apologize. But I'm done cooking, man. I'm done cooking. Yeah, hey, here, y'all welcome to take them. Y'all welcome to take them. If y'all want to. Y'all welcome to take them. All right. I got to take this call, y'all. I got to take this call, but y'all know what? This right here was too good to leave up for everybody. This was too good to leave up for everybody. This gonna be a gang exclusive. It's gonna be a gang exclusive. I'm gonna make this disappear right now, and then gang, I'll share the link with y'all later. Until the next time I decide to get on Algo's internet and share my thoughts on this thing they call price action. It's your boy Timothy Lee Rogers Sr., aka Aranya Grande. That should be a big spot if you don't hablo español. Y'all be safe out here in these trading streets, man. Gone.